Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're looking at Quantumscape.
If you find our talks useful, please consider subscribe, like, and comment underneath. Okay, so let's get into this one. We're talking about a company, Quantumscape, that people have called the holy grail of the EV battery world.
They had.
It's pure drama. Huge potential, but let's be honest, it's been an absolute roller coaster for investors.
Oh, it really has. Quantumscape is one of those, rare companies that sits right at that intersection of world-changing tech and financial nail-biter.
A nail-biter for sure.
It's the classic high-risk, high-reward play. But today we're looking at it from the perspective of early 2026.
Right, and the scene has changed. The EV market is evolving, the tech is maturing, but the financials for Quantumscape.
Well, let's just start there.
Okay.
Because the first thing I see is that they're still strictly pre-revenue. Does that worry you? I mean, for a company that's been public this long, that feels a little scary. It can be, absolutely. If you're looking for, a traditional value stock with dividends, this is not it. You're in the wrong place.
Right.
But you have to put it in context. Yes, as of now, early 2026, they are pre-revenue, and they are burning a lot of cash. We're talking losses over $400 million a year.
Whoa, hang on. $400 million a year?
Annually, yes.
That's more than $1 million a day. Just gone.
It is. It's expensive to reinvent battery physics. You've got materials, equipment, the scientists. It all adds up. But, and this is a very big, but their balance sheet is surprisingly strong for a company at this stage.
So they're spending a ton, but they have a ton in the bank to back it up.
Precisely. Let's look at the numbers. They have $1.32 billion in current assets.
Okay.
And only $165 million in total liabilities.
So that's like an 8-to-1 ratio. For every dollar they owe, they have $8 in assets.
Something like that, yeah. It creates this huge buffer. And when you look at liquidity, the actual cash they can spend, projections show their reserves are around $860 million.
So if I can use an analogy here, it's like they're spending a fortune on a really expensive hobby, building these batteries, but they got this massive trust fund so they can afford to keep doing it.
That's surprisingly accurate, actually. They're bleeding money, yes, but they have a massive savings account. And that liquidity runway, it extends all the way through 2026.
And why is that date through 2026 so important right now?
Because 2026 is the year of truth. It means they can fund their vehicle testing, which is critical, without having to run back to the market to sell more stock and dilute everyone.
That is a huge deal. No one wants their shares diluted to death. Okay, so let's pivot. Why are we so obsessed with this stock? What is the secret sauce?
The secret sauce is their solid-state lithium metal technology, what they call their QSE-5 cells.
And this isn't just like a small improvement, right? We're not talking 10 extra miles of range.
No. This is a paradigm shift. The edge here is really about three things: higher energy density, way faster charging, and much better safety.
The fast charging is what always gets me. That's the biggest headache for EV owners. If you can charge your car in the time it takes to get a coffee,
the whole game changes, and that's the promise. See, current batteries use a liquid electrolyte. It's flammable, and it limits how fast you can charge. Quantumscape replaces that liquid with a solid ceramic separator.
Ceramic. Like a coffee mug.
A very, very highly engineered, flexible ceramic, but yes, same principle. Because it's solid, it's not flammable, and it lets them use a lithium metal anode, which holds way more energy than the graphite we use today.
So safer, more power, faster charging. It sounds perfect. Is it still just on paper?
And that's the moat. It's not just a lab experiment anymore. It's IP protected, heavily patented, and it's been validated by some very, very heavy hitters.
Let's talk about those partners. Who's on the list?
Well, the big one, the anchor tenant, is Volkswagen and their battery company, PowerCo. They've been in this from the start.
Pouring in money and engineers.
Absolutely. Then you have Corning involved in the supply chain.
Corning, the glass company that makes my phone screen.
The very same. They're experts in ceramics, which is obviously crucial for that separator we were just talking about.
That makes perfect sense. And then there was that recent news, the mystery partner.
Right, the mystery partner. Just back in December 2025, they announced a joint development agreement, a JDA, with a top 10 global automaker.
But they haven't named them. Why so secretive?
It's pretty standard in the auto industry. But what it signals to the market is that this isn't just a one-trick pony for VW. The tech has broader appeal.
And the market potential here is, I mean, it's insane. I saw a projection of 56% compound annual growth through 2030.
It's astronomical. And
Right.
Quantumscape has what you'd call a first-mover scale advantage. Their competitors are talking, but QS is the one scheduled for actual in-vehicle testing this year, in 2026.
So they had the cash, the tech, the partners.
Yeah.
Okay, let's look at the scoreboard, the stock price. 2025 was a wild year.
Wild is an understatement. The stock surged over 100% in 2025. I've seen reports saying 200% gains from the lows back in April.
Just incredible momentum. So where are we trading now in early 26?
We're hovering between, say, $10.33 and $10.98. It even poked its head above $11 recently.
So it's kind of finding a new home in that $10 to $11 range.
It is, and that's important, psychologically, even though it's pulled back about 40% from the highs in October.
Sounds pretty bad.
It does, but it hasn't collapsed back to those April lows. It's holding above key support levels. It suggests a new, higher floor is being built.
Okay, so if you zoom out, the trend is still up.
Exactly. And the technicals sort of back that up. For example, the stock jumped 8 or 9% in pre-market trading just on that mystery partner news.
Shows the market is hungry for it.
Very hungry. And it's trading above its 200-day moving average, which is your classic definition of a long-term uptrend.
What about that nerdy metric you like, the put-to-call ratio?
Yes. It's sitting at 0.33.
Okay, break that down for me. What does that mean in plain English?
It measures bets. Puts our bets, the stock goes down. Calls our bets, it goes up. A ratio of 0.33 is really low. It means a lot more traders are betting on the price rising than falling.
So the active money is bullish, which brings me to this, what I'm calling the sentiment paradox.
Go on.
Because the story feels good, the chart looks pretty strong,
Yeah.
but not everyone is on board.
Yeah.
There's a real conflict in opinions here.
There's a massive conflict. It really breaks down into 3 camps. You have the news, you have the analysts, and you have the insiders. And they're not singing the same song.
Okay, camp 1, the news.
News sentiment is what we call moderately bullish. Out of the last 5 big headlines, 4 were positive. That JDA, the NASDAQ listing, the media is treating it all as good news.
So the headlines are good. Camp 2, the analysts, the Wall Street pros.
They're still pouring cold water on it. The consensus is a moderate sell, and their average price target is $9.89.
Wait, $9.89? That's actually below where it's trading right now.
It is. They're basically saying it's overvalued. They're waiting for execution. They want to see the revenue before they believe the hype.
Skeptical. Okay, so camp 3, the insiders, the people running the show. Are they buying?
This is where it gets tricky, and it's what spooks a lot of people. There has been selling.
Okay, give us the details.
Well, you have director J.B. Straubel, Tesla co-founder. He sold about $300,000 worth in early January.
Yeah.
The chief legal officer sold chunks in October and November. And director Buss sold $5.4 million worth back in October.
$5.4 million. Okay, when I see an insider dump that much stock, my first instinct is to run for the hills. Is the ship sinking?
You have to take a breath before you panic. This is key. These were all Rule 10b5-1 sales.
The thing in the fine print?
Mm-hmm.
What does that actually mean?
It means the sales were scheduled months, sometimes a year, in advance. It's automated. They didn't wake up, see bad news, and decide to sell.
So it's more like pre-planned portfolio management, paying taxes, buying a house, that kind of thing.
Exactly. The optics are bad. It looks terrible in a headline. But it's not necessarily a lack of faith. I mean, if your entire net worth was tied up in one volatile stock, you'd probably sell a little too.
That's a very fair point.
Mm-hmm.
Okay, so if I'm holding this now, what am I waiting for? What's on the catalyst calendar for the next few months?
All right, the roadmap is pretty clear. First up is Q4 2025 earnings, probably late Feb or early March.
And we're not looking for profit, obviously.
No, but you want to see if they're managing that cash burn. And then you're listening for guidance on the big milestone for 2026.
Revenue.
Actual revenue. The projections are for about $5 million in 2026.
$5 million. I mean, compared to their valuation, that's a rounding error.
It is tiny, but it's so symbolic. It's the first drop of water from the tap. It proves their intellectual property has real monetary value, likely from that VW licensing deal.
Okay, what about actually making the things? I keep hearing about Eagle and Cobra.
Right, operationally, that's what to watch. The Eagle line and the Cobra process.
Sounds like an action movie.
Cobra is their new, faster manufacturing process. It's the key to mass production. Proving they can scale that up is everything.
And then the final proof.
The final proof is the in-vehicle testing that's ramping up this year. Getting data from real cars on real roads, that is the de-risking event everyone has been waiting for.
That's the moment. It either works in a car or it doesn't.
Yeah.
So let's play devil's advocate. What kills this whole story?
Two main things. Number one is execution risk.
The classic.
Yep. If that 2026 vehicle testing fails, or if the covert process has problems, that $400 million burn rate suddenly looks terrifying.
And the second risk?
Valuation. Like we said, the analysts think it's expensive, the stock is volatile. If the whole market turns sour on growth stocks, Quantumscape could drop 20% for no reason at all.
Okay, so let's put it all together. The final verdict. What's the score?
I'm giving it a 7 out of 10. Bullish.
7 out of 10. Okay, what's the core thesis for that?
Simple. They have the tech edge in a huge market. The partnerships with VW and others create a moat. And they have the cash to survive until the testing proves them right.
And you think it's undervalued at around 1050?
If, and it's a big if, you believe in the multi-year EV story. This isn't a stock you buy for next week. You're buying it because you think solid state is the future.
So it's a multi-year hold. You're waiting for those 2026 milestones.
You have to be patient. It's a high-octane play for the patient investor.
I like that. It feels like watching a rocket on the launch pad. It's all fueled up, but we're just waiting for liftoff.
That's a perfect way to put it. And maybe a final thought to leave you with is this. In 2026, it's not about the science anymore. The science project is over. Now it's all about manufacturing execution. It's not, can they invent it? It's, can they build 1 million of them? And that is a completely different challenge.
From the lab coat to the hard hat. That's a great way to think about it. Thanks for joining us on Smart Wealth with Joshua. We'll catch you in the next one.